All right, so you wanted the scoop on Inox India Limited. And, well, let me tell you, you've got a ton of info here. We've got financial reports, press releases, even board meeting minutes. We went full-on detective mode for this deep dive.
Yeah, and what's really interesting here is that we're not just looking at numbers, we're getting a real behind-the-scenes look at a pivotal point in IOX's journey.
Okay, so for anyone who isn't familiar with the company, Inox India Limited is like the top tier when it comes to cryogenic equipment.
Mm.
Those huge tanks you see carrying liquefied natural gas or industrial gases, things that have to be kept super cold. They're the experts.
Yeah, and they've been doing this for over 30 years. They operate globally, and they're known for their custom-built, high-quality product.
Right, exactly. And today we're going to break down their second quarter performance for fiscal year 2025. But,
Mhm.
and this is where it gets interesting, there's a twist. We've also got this whole situation with some of their promoters wanting to change their status. Talk about a
Oh.
curveball. So you're ready to dive in.
Absolutely. Let's get into it. The first thing that really stands out is just how well Inox is doing. They had a stellar Q2, 21% year-over-year revenue growth, bringing them to a total of Rs 320 crore.
Now, that's impressive. That kind of growth is phenomenal, especially when you consider the global demand for clean energy right now.
Right, and it's not just revenue, their EBITDA. That's earnings before interest, taxes, depreciation, and amortization. Grew by 17.7%, reaching Rs 77.3 crore. EBITDA is like your take-home pay, before all the deductions. It gives you a clear picture of how much money the company is actually making.
Okay, so they're bringing in the cash. But what about profit? The actual bottom line.
Well, their profit after tax pay increased by a solid 10%, hitting Rs 50.1 crore. All these numbers point to a company that's in really great financial shape, with some serious growth potential.
This is where it gets super interesting. Their order inflow for the quarter was a record breaker. It hit Rs 366 crore, a 21% increase year over year. It's like the market is giving them a standing ovation.
It really shows strong market confidence in the company and its future. And that translates to a record high order backlog of Rs 11,178 crore. Basically, they have a ton of work lined up. It shows they're not just riding a wave, they're building momentum.
Yeah, and they're not just playing in their own backyard either. Exports made up 52% of their total revenue this quarter.
Yeah.
Bringing in Rs 166.4 crore. They've got a global reach.
Absolutely. This global reach is key for their resilience. It means they're not overly reliant on any single market.
Okay, let's zoom in a bit here. Inox has a few different divisions. What's the breakdown looking like?
Well, their industrial gases division is their strongest performer. It brought in a solid 59% of their total revenue this quarter. They've got some major projects going on, like an EPC order, that's engineering, procurement, and construction, for a natural gas plant in Saudi Arabia. Plus, they just shipped a high-purity ammonia tank to the Middle East. We're talking high-tech, high-stakes stuff.
Wow. Yeah, I can picture those huge tanks crossing the desert.
Yeah.
It's amazing to see Inox making such an impact on a global scale. What about their other divisions?
Well, their LNG solutions segment is doing incredibly well. It accounted for 19% of their revenue this quarter, which makes sense considering the global shift towards LNG as a cleaner energy source.
Right, it's like they're riding the green wave.
Exactly. They're getting big export orders for LNG trailers and those complex storage and distribution systems, especially from South America.
It's remarkable how they've diversified and really tapped into these growing markets. What about their cryoscientific division?
Now, this is where things get really interesting. They're playing a crucial role in France's ITER project, which is a massive international research project focused on fusion energy. The same process that powers the sun. Inox's involvement in this groundbreaking project really speaks to their technological expertise.
So they're involved in cutting-edge scientific research, global infrastructure projects, and they're meeting the demand for clean energy. They're really covering all the bases.
They are. And even their stainless steel kegs segment, which had slowed down a bit, is starting to see renewed interest from global breweries.
Okay, so Inox is clearly doing incredibly well. But there's one more piece of this puzzle that I have to ask about, this whole promoter reclassification thing. What's the deal with that?
Okay, so here's where things get a little strange. We've got this group of individuals and entities who are currently classified as promoter and promoter group, but they're trying to change their status to public.
Hold on, let me break that down for our listeners. In the Indian stock market, a promoter is someone who has a lot of control over a company. They typically own a big chunk of the shares and have a major say in how the company is run.
Exactly. Public shareholders, on the other hand, don't have that same level of influence or control. And here's the weird part. Many of the people asking for this reclassification, including some big names like Pradeep Kumar Karuka, Karen Karuka, and Borosil Limited, don't actually own any Inox shares.
Zero shares. That's pretty uncommon, isn't it? What could their motivation be?
That's the million-dollar question. Others in the group, like Lada Rungta and Manju Jain, do own a small percentage. But it's still interesting that they're all going for this change. This move needs approval from both shareholders and the stock exchange. So it's not a minor thing.
So why would they want to give up their promoter status? Especially those who don't even have any shares. It's a bit of a head-scratcher.
Yeah, it is. The outgoing promoters have confirmed that they're not involved in the day-to-day business, they don't have control over management, and they're not involved in any transactions with IOX.
So if they're not actively involved, why go through all this trouble to reclassify?
That's what's so intriguing. Some people think it might be a strategic move to simplify the company's ownership structure, or maybe to pave the way for a new leadership team.
Or maybe they just want to reduce their personal risk and exposure. It's a bit of a mystery, isn't it?
It really is. It's hard to say for sure without more information, but one thing is clear. This reclassification could have a significant impact on INOX's future governance and direction.
Now, this is getting juicy. We'll definitely be keeping a close eye on this development. But for now, let's get back to IRX's impressive performance this quarter.
Okay. Their strategic move into international markets, especially their focus on LNG and the cryoscientific sector, seems to be paying off big time.
It's like they have a crystal ball and can see the future of the energy sector.
Yeah. And their strong order backlog and record-breaking financials are proof that their strategy is working.
So it's clear that INOX is a company on the move. But what does this all mean for our listeners?
Well, if we look at the bigger picture, INOX's success reflects some major trends that are shaping the global economy. The increasing demand for clean energy solutions, the growing importance of international markets, and the rapid pace of technological innovation. These trends are impacting businesses everywhere.
It's like INOX is a case study in how companies can not just survive, but thrive in this dynamic environment.
Exactly. By diversifying their offerings, expanding globally, and investing in new technologies, they've managed to stay ahead of the curve.
Their journey offers some valuable lessons for businesses of all sizes. It also makes you think, how can we apply these lessons to our own lives and careers? How can we stay ahead of the curve and position ourselves for success in a world that's constantly changing?
That's a great question to think about. But before we get too deep into that, let's dive into INOX's financials a bit more. We're going to break down their key financial ratios and see what they tell us about the company's overall health and profitability.
Stay tuned, because things are about to get really interesting.
So let's start by taking a look at INOX's profitability, their EBITDA margin, which basically tells you how efficiently they turn revenue into profit, is sitting at a healthy 24.2%.
Okay, so for every Rs 100 they make, they're pocketing Rs 24.2 in earnings. Before all the other expenses are factored in, that's a pretty good sign that they're managing their finances well, right?
Absolutely. Shows they're running a tight ship. And their PP margin, which includes all the expenses like taxes and interest, is at a respectable 15.6%. This means they're not just making money, they're keeping a good chunk of it too.
All right, so they're profitable. But what about their return ratios? These are the numbers that tell us how well they're using their resources to make money for investors.
Right. Their return on equity, or ROE, is a solid 30%. So for every Rs 100 invested by shareholders, INOX is generating Rs 30 in profit. That's a clear sign they're using their investors' money wisely.
And their return on capital employed, or ROCE, is even better, at 39%, meaning they're making Rs 39 in profit for every Rs 100 of capital used. That's impressive.
It is. They're really maximizing their resources. And speaking of resources, let's talk about debt. How much are they borrowing to fuel all this growth?
Well, that's the surprising part. Their net debt, which is their total debt minus any cash they have, is pretty much zero.
Wow, that's unusual. They're essentially operating debt-free, which is a huge advantage, especially for a company that's growing as fast as INOX.
It's like they're playing the game on easy mode. Most companies have those interest payments weighing them down. But INOX has all this extra cash flow to invest back into the business or even return to shareholders.
Exactly. It really speaks to their financial discipline. They're clearly managing their cash flow very effectively. Their strong operating cash flow lets them fund their expansion plans without relying heavily on outside financing.
So financially, INOX seems to be in a great position. Profitable, generating great returns for investors, and virtually debt-free. It's a recipe for success.
It really is. Their financial strength gives them a solid foundation to build upon. But, all this success makes the promoter reclassification even more puzzling.
I know, right? On one hand, they're performing incredibly well financially. And on the other, you've got these key players seemingly stepping back.
Yeah, it's a strange situation. It doesn't make a lot of sense on the surface. Maybe, like we discussed earlier, there are strategic reasons for this move. Maybe they want to streamline the ownership structure or bring in a new leadership
Or
team.
maybe they're trying to reduce their personal liability.
It's possible.
Or maybe they're trying to increase the company's free float. You know, the percentage of shares available for public trading. A higher free float could attract more investors and potentially boost the stock price. It's all speculation at this point. But it definitely adds another layer of intrigue to the Inox story.
Absolutely. It just shows that it's important to understand not just the financials of a company, but also the corporate governance and the relationships between its key stakeholders.
It's a good reminder that investing isn't just about the numbers. It's about understanding the people, the strategies, and the motivations behind a company's success. Or in some cases, it's mysteries.
Yeah, it's about connecting the dots, asking the right questions, and trying to understand what's really going on.
Inox is a perfect example of that.
Mhm.
It's a story of ambition, innovation, and growth. But it's also a story of intrigue and uncertainty. Who knows what's next?
Exactly. Now, speaking of growth, let's shift our focus to INOX's future plans. What are they doing to keep this momentum going? What opportunities are they looking at?
That's a great question. They're on a roll right now. But how do they plan to keep it up? We'll get into all that right after this quick break. All right, so we're back and ready to dig into Inox's plans for the future. From what I'm seeing, they're really focusing on some exciting opportunities, especially in the clean energy sector. They're going all in on expanding their presence in both the LNG and hydrogen markets.
Yeah, it's a bold move for sure. But it makes sense when you look at the global energy landscape. They're not just satisfied with providing equipment anymore. They want to offer complete solutions, from production to storage to distribution. It's like they're aiming to be the go-to source for the entire clean energy transition.
So they're not just building the tools, they're shaping the whole industry. Let's talk about LNG first. What kind of opportunities are they seeing there?
Well, the demand for LNG is skyrocketing, especially in Asia. Countries like China, India, South Korea, Pakistan, Bangladesh, they're all searching for cleaner alternatives to fossil fuels. And LNG is a top contender.
And Inox is already a major player in the Indian LNG market, right?
Oh, absolutely. They've been supplying a huge chunk of the stationary and mobile LNG tanks in India for years. Now they're looking to expand their offerings to include things like LNG fueling infrastructure for ships and vehicles.
So they're betting on LNG as a transportation fuel. That's a smart move with the global push for cleaner transportation options.
Exactly. And it doesn't stop there. They're also eyeing the hydrogen market, which is getting a lot of attention as a potential game changer in the clean energy sector.
Yeah, hydrogen is definitely the buzzword these days. Everyone's talking about it as the fuel of the future. How is Inox approaching this sector?
Well, they're taking a similar approach to LNG. They want to be involved in every stage of the hydrogen journey, from production and storage to distribution and in-use. It's ambitious, but they have the know-how to make it happen.
That makes sense. Hydrogen needs to be stored and transported at extremely low temperatures,
Mm.
which plays right into Inox's expertise in cryogenic technology.
Exactly. And they're already making some big moves. They've developed these trailer-mounted hydrogen transport tanks in collaboration with ISRO, the Indian Space Research Organization. They've also supplied liquid hydrogen tanks to customers in South Korea and secured orders from major Indian oil companies like IOCL, BPCL, and HPCL. They're not just testing the waters, they're diving right in.
It's great to see them not just adapting to the changing energy landscape, but actively shaping it.
Absolutely. It's a testament to their vision and their commitment to innovation.
Their story is really inspiring. It shows that even well-established companies can thrive in a rapidly evolving world if they have the right strategy, the right mindset, and a willingness to embrace new technologies.
It highlights the importance of thinking long-term and focusing on sustainability.
They're proving that you can do good and do well at the same time. Their journey is a reminder that we all have a part to play in creating a more sustainable future.
It's a call to action for all of us to think about the impact of our choices and support businesses that align with our values.
Well said. This has been a fascinating deep dive into Inox India Limited, and we'll definitely be following their progress as they continue to grow.
It's a story that's still unfolding, and we're excited to see what the future holds.
That's it for our deep dive into Inox India Limited. We hope you found it informative and insightful.
Until next time, stay curious, stay informed, and remember, the world is full of incredible stories waiting to be discovered.